QuickBooks Pro Desktop 2021. Pay payroll taxes. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're down here in the employees section. We're going to be thinking about paying off the payroll taxes. Before we do that, just remember when you're talking about the payroll information within QuickBooks, there's a couple different ways that you could be running the payroll process. You could be running it within QuickBooks, and if you are doing so, you should have this kind of arrow going through these three items down below, which is kind of an indication that some type of payroll has been in place. When you run it within QuickBooks, you probably want to have some type of paid payroll within QuickBooks because that really helps you to be using the calculations for things such as the payroll taxes, especially the federal income taxes. Even if you have a limited amount of employees, probably beneficial to do the paid payroll. We are doing the manual payroll here, which we set up to do the manual payroll, and that's really good for practice problems because it actually forces you to enter the payroll in place so we get a better idea of what's actually happening when they have withholdings and we make the payroll, but it's a lot more burdensome to do so and easy to make errors when doing the calculations for the payroll for each individual employee. Also note that you might be running payroll with something like a third party that would be doing payroll, basically the detail outside of possibly QuickBooks, the big companies being like an ADP or a Paychex, and they might be processing the payroll, and then you would have to be putting that payroll, whatever was processed into your system. In other words, they would have the detail of the payroll, and then you might put the information in your system so that you have the information in QuickBooks to represent the financial statements properly. So those are kind of your methods that you can use. What we are using, just so you can see this, is in the edit dropdown into the preferences. If you go down to the payroll items, payroll and employees, and the company preferences, we turned on the manual payroll. So that's the free payroll that's really good for practicing. But again, if you want to use QuickBooks Payroll, I would use the paid payroll of some kind. And to get advice on that, I would talk to someone that you're not paying to do payroll, such as an accountant or CPA firm, to give you advice, and then talk to your different options in terms of what you want to pick up. So we've been processing the payroll here, entering the payroll. Now we're thinking about paying the payroll liability. Let's go up top to the reports to see what we have done thus far. We're going to go to the reports drop down. We're going to go to the company and financials, and we're going to go to the balance sheet. Let's take a look at the balance sheet, and we will change the dates up top to the customized reports from 01/01/21 to 12/31/21, and then I'm going to say OK. So now as we processed payroll, we've been increasing this item here, which is the payroll liabilities. So if I double click on the payroll liabilities, here's kind of the detail of the payroll liabilities. It looks quite burdensome even with only 2 employees because it's giving us all the detail of kind of the payroll in this format. So here we have that, but notice this is only for one payroll period too because we're only paying monthly. So we're paying monthly here, and this is for one payroll period that happened in January, and now we've been collecting the payroll from it, which we will then be paying in February. So now it's February. We're going to pay off the payroll liability that happened in January. Let's go to the profit and loss now. Reports drop down up top, company and financial. Let's take a look at the profit and loss standard, changing the dates up top from 01/01/21 to 12/31/21. And then here you'll note that we have payroll expenses. If we go into the payroll expenses, we have our detail basically for the payroll expenses on this side of things. Now remember, as we do this, sometimes it's easier to take a look at this in like an Excel type of format to kind of get a picture of what's happening in payroll. Most people don't really understand what's going on in payroll. So if you have a grasp of this, it makes it a lot easier. When you look at all the detail within payroll, that's really what often can muddy the waters a lot, because when you're running the payroll through the system, they're breaking out all this information per employee and kind of per line item. So these reports get very large and kind of overwhelming. But if you think about it in total, it makes more sense, right? And then you can break out the total concept of what's happening on a check by check type of basis. So if we look at something like this, notice this is the same kind of thing, just in an Excel type of format. This is something that you might get if you were working with like an outside payroll company, like an ADP or a Paychex. They might help you to basically, if you were working in that kind of system, a third party that's helping you to process the payroll. They might help you process the payroll, get the detail per the checks, provide the check stubs and all that kind of stuff. And then you would take that information and in some way, shape, or form, put it into your books so that you have the financial data broken out. So in that case, you might have less burdensome data here with all the detail on it. If you need that detail or when you need it, you'll go to the payroll company. What you will then have in your system might be something that would be just for the financial statement use and whatnot, a little bit more condensed information. So you might use something like this, which would be kind of a payroll register to just recap what happened. Now, we only have the 2 employees. What's happening with this one payroll? All we ran was one payroll because we're paying monthly, or we're processing payroll monthly. Now, if you process weekly, if you do payroll weekly, then you'll have weekly payroll. If you do, twice a week, semi-monthly, or bi-weekly, then you're going to have multiple payrolls. And again, we only have the 2 employees, and it's still, you can see how the information starts to get quite expansive just with these 2 employees, given the types of withholdings that will be taking place. Also note that when you think about when you pay the payroll, we are going to be withholding Social Security, Medicare, and we'll have to pay our portion of Social Security, Medicare, and you might have state taxes as well that you have to deal with. The question is, once I withhold them, when do I have to pay them? So you have to think about that in terms of circumstance by circumstance. It may depend on how large your payroll is as to how often you have to basically pay the government on it. So it's similar with the sales tax. Obviously, we will be collecting the payroll taxes for it. And then the question is, when do we have to pay it? In our case, we have monthly payroll. So we're going to assume here that we're going to be collecting the payroll every time. So in this case, for the month of January, because we had one payroll in January, and we're going to assume that we pay it in February. And so you're going to have that lag period. And again, you'll have to determine based on your particular circumstances, how large your payroll is and your state needs and whatnot, when exactly you have to pay after the payroll has been processed. So what happens when we do the payroll, when we actually issued the check, which we did in January, this is January's check, we had our 2 employees, which you can think of as an employee by employee situation, or you can think about them in total down here. So if we think about it in total, we had total earnings, and then we took from them Social Security and Medicare. Now we took that out of their paycheck, and we put it in, and we didn't pay them it, right? So they should have earned $5,383, but we took this amount out for Social Security and Medicare and federal income taxes, and we only gave them $4,141.51. These 3 that we took out are not our payroll taxes; they're the employees' payroll taxes. The government just forced us to be the collection agency on it. So we said, hey, look, you earned $5,383, but the government doesn't trust you to pay your own taxes. So they made us take it out of your check and then hold on to it and pay it for you, right? So these are their payroll taxes. And then this amount over here is actually our payroll taxes that we have to pay as the company, not on our income that we earn, but on the employee's payroll. So we have to pay payroll taxes on the employee's income that we pay them over and above that. So those are the payroll taxes that have been accumulated. So if we add these up for all the employees, you can see it's a little bit easier to see in total. That would add up to $1,653.65 on the total payroll taxes. So if we go back on over to our reports, basically, and if we go to the transaction detail for the payable, we got the 1653.66, and that adds up to the 1653.65 about, right? Because there's rounding that's going to be involved. And then you can see what's included in here. It's going to be for Adam. This amount is the federal income tax, Social Security that we took from Adam. This is the Social Security that we had to match. And then we had our other employee federal income tax that we had to take. That's her federal income tax, our employees, not our federal income tax as the company. And then Social Security, and then Social Security we had to match, and then Medicare we had to match. So that's going to be what we owe at this point in time, and that's what we'll process when we pay this out. So basically, we're just going to write a check. Now, we're only focusing in on basically the federal income taxes here, which is federal income tax, Social Security, and Medicare. And remember, we're not talking about our federal income tax that we might owe as like a company. If we were like a C company, we're not paying taxes on our income. We're talking about federal income tax for payroll taxes, meaning the federal income tax that the employee pays. This is their federal income tax that we're required to pay for them, right? So that's we're required to take the money from them or not ever give them the money and then pay it on their behalf. Okay, so then we have a nice little thing down here on the home page that allows us to process this for us, and that's going to be the pay liability. So obviously we're just writing a check basically to the government, and we're talking about the federal taxes. So even though we have 3 different taxes we're thinking of, really, Social Security, Medicare, and the federal income tax, they're all federal government taxes. So these are all checks that are basically going to the Fed for 3 different programs. And then if you have a state taxes, then of course you'd have state taxes as well that you would have to be basically thinking about, and QuickBooks can help you out with that more and more. They're getting really good at being able to process their payroll from like a region by region. States are more difficult because they change from state to state. So the software doesn't have one blanket rule for the country. And so you have to make sure that you're lining up from the state by state requirements. Now, if you want more detail on this payroll transactions and whatnot, we do have a payroll course on it, and so you could take a look at that for more detail with it. So I'm going to go to this pay liabilities here, similar little tool that we had for the managed sales tax, and we're going to say, all right, I want you to take the dates from 01/01/21 to 01/31/21. So meaning I want you to take the payrolls that happen in January, which because we only pay monthly is 1, and then we're going to be paying that now because now it's the month of February in our practice problem. So I'm going to say okay. So we say okay, and then there we have it. So we got the 1653.66. If I go back to my transaction detail, 1653.66, so that makes sense. It looks like the same amount there. So we can either print or not print the check. So if we're writing a check, we might print it. I'm not going to write the check. If we're doing some kind of electronic payment, then we would uncheck that as well and not use a check number. Review a liability check to enter expenses and penalties. Create liability check without reviewing. I'll keep the review on for now. It's going to come out of the checking account. We're going to be paying this on, I'm going to say 02/28/21, 02/28/21, and sort by, I'll keep that there. Dates, we're going to say show payroll liabilities, and I'm going to keep the custom range for January, and then here's the liabilities that are there. So I could then select these items, and I'm just going to select the ones with balances in them. Now, the federal unemployment, that would be an employer tax. We haven't gotten into the federal unemployment. That would be something you'd have to calculate on the federal level as well. It wouldn't come out of the paycheck. I'm not going to get into it now. If you want to take a look at that more, you could take a look at our payroll course. But I'm going to have to set up basically a vendor as we do this. So I'm going to go check this second one. Payroll item has no liability agency. Do you wish to enter one on the payroll item? I'm going to say yes. Let's enter the liability agency. It's going to be the federal withholdings. I'm going to say next. And the agency I want to pay, I'm just going to call it the Internal Revenue Service. Internal Revenue Service. This is going to be the vendor that I'm going to set up. Is not in the vendor, so it's going to set up a vendor. I'm going to say yes. Let's set it up. Quick set up. It's going to be going to the payroll liabilities. That's going to be the account that's going to be affected. So that's good. I'm going to say okay. Select the items that will increase wages for calculating federal withholding. I'm going to keep these items there. Say finish, and there we have that one. I'm going to do the same for the Medicare. I'm going to say, and then I'm going to say Medicare, and then enter the name of the agency. Now, they're going to want a different name when I use this manual setup. So I'm going to say Internal Revenue Service, and I'm going to say Medicare. So Internal Revenue Service, Medicare, and then I'm going to say next. It's going to add that, so I'm going to add the agency, and then I'm going to say enter the name of the agency to which the liability is paid. That's good. And then payroll expenses, I'll keep that there. We'll keep that there. And then these two selected, good, and finish. So there we have that one. We're going to have to do the same for the Social Security. So I'm going to do the same for the Social Security. I'm going to say okay, and then next, and then I'm going to change this one again to, I'm just going to call it Social SSS and say tab. And notice many times when you set up the payroll, you might need to pay your payroll taxes basically electronically. So you want to basically look into the payment options to make the payroll tax payments, and look into that in the Internal Revenue Service. With the Internal Revenue Service is a good place to start with that search. But I'm going to say quick add here. I'm going to say next, and payroll expense okay, and next, and good. So there we have that one, and so that's all of them here. So that gives us the 163666. Does that tie out to my transaction detail? 165366 and 165366. Yes. Okay, so that's what we have here. So we're going to that's the date. That looks good. And let's go ahead and create. So if we create this, then it created basically multiple checks here. So we've got the Internal Revenue Service. This is paying for the federal tax. This is the FIT tax. So I'm going to say that's good. So it's going to be paying them separately for the federal tax, the Medicare, and then the Social Security. So I'm going to say good, save and close. And let's go to the register now and see these items. So let's go to the banking. You can go to the use register here, or you could go to I like to go to lists, chart of accounts, and then double click on that checking account. And then if I scroll down to the bottom, we have these 3 checks that were created here. And again, it assigned the check number for us. If you pay electronically, then you just wouldn't want to assign the check number. And then the first one is paying the FIT, federal income tax, not our federal income tax as the company, but the withholding federal income tax, the federal income tax of the employees that they owe that we withhold. And then we have the Medicare and then the Social Security. Now note they're just checks, meaning they're formed. The form is going to be a form that's decreasing the checking account, but they're labeled specially down here so that we can see it's a special type of check that's basically indicating that we used the payroll liability function in order to enter that data into our system. So there we have it. If I close this back out, let's take a look at our reports. Closing this back out, closing this back out, and let's close this for now. And let's go back into our balance sheet. Balance sheet in the open items. So if we go to the payroll liability down below, it's now gone to 0 because it went down to 0 because we only had a monthly payroll, and we haven't processed the payroll for February yet. So let's go to the trial balance by going to the reports up top, going to the accounting and taxes, and then the trial balance, changing the dates from 01/01/21 to 12/31/21. So then we have the payroll taxes, payroll liability. So if I double click on that item, so now we have the payment down here, and it brings us back down to 0. Now note we haven't processed the payroll for February, so we'll do that shortly, and that'll mean we will have the payroll liabilities that'll be there for February that we will then pay in March. So closing this back out, obviously the other side would be in the checking accounts. So the checking account, double clicking on the checking account, we see the checks that were paid. Now they are still checks down here, but they're specially labeled in the type, which is nice because that basically tells us, look, you used the special tool of the payroll liabilities system, the module thing, to do it. And by doing that, you should have a little bit more security. So when you set up the payroll, you want to use the modules that are going to be set up, even though you're basically just writing a check, because that'll allow the system to work within the modules. It's going to give you more checks against making errors to do so. So rather than just writing a check, we used the little payroll setup module, and if we go into it, we then see basically a check item here, but instead of having the expenses on the left, we're on the right-hand tab, which is for the payroll liabilities, indicating the payroll module was used. Closing this back out, closing this back out. Let's see, this is where we stand at this point in time. So we've got the balance sheet here. Then if you're checking your numbers, you can check those out. And there's no effect on the income statement right now because all we did was pay off the liability. When was there an effect on the income statement? When we processed the payroll. So when we processed the payroll, we recorded the payroll expenses, and we recorded the payroll taxes, which were grouped together for QuickBooks, but could be separated. The payroll taxes would be only the employer portion of the payroll taxes. Then the trial balance, if you want to check your numbers on the trial balance, which I think is the easiest place to do so, here's where we are with it.